Welcome to Impact Headlines. Violent protests escalate in Bangladesh. US recession fears increase. Oil prices near 8-month low. Violent protests in Bangladesh between protesters and the armed forces have escalated, taking more than 300 lives. On Monday, the Prime Minister resigned and left the country to India. Protests initially started in early July with students peacefully protesting against the preferential job quota system for government jobs. This later transpired into anti-government protests against Sheikh Hasina's increasing autocracy and handling of the economy. According to analysts, the curfews and shutdowns are expected to cost the economy around $10 billion. Impact on Sri Lanka. Political unrest in Bangladesh can have a direct impact on Sri Lankan businesses, particularly those with apparel manufacturing and exporting facilities in Bangladesh. Sri Lanka has been benefiting from bilateral trade with Bangladesh, maintaining a positive trade balance. Bangladesh is currently Sri Lanka's 14th largest export destination. The global markets plunged with mounting fears of the US economy heading back into recession. The sell-off followed a dismal unemployment report and the Fed's decision to maintain current interest rates. The situation also saw Japan's Nikkei index experiencing its worst drop since 1987. Goldman Sachs now believes that the US has a 25% chance of going into recession, up from 15% previously. Meanwhile, the World Bank expects the US economy to grow 2.5% in 2024. Impact on Sri Lanka. The United States is Sri Lanka's largest export market. In the first 6 months of 2024, exports to the United States rose to $1.4 billion, up 0.4% from a year earlier. Stronger demand from the US citizens will help the island nation to reduce its expanding trade deficit. Oil prices have fallen to a near 8-month low, with Brent futures at $76.8 per barrel. This decline follows recessionary fears in the US, which offset escalating tensions in the Middle East. Oil demand is expected to remain subdued in the coming months due to sluggish global recovery. In June, OPEC extended its production cuts, hoping for increased demand in the US during summer. Impact on Sri Lanka. Sri Lanka's high dependency on oil imports means higher prices significantly affect its balance of payments. While the country's foreign exchange reserves have improved in the recent months, they still remain dangerously low at just over 3 months of imports. Lower oil prices could help alleviate some of this pressure by reducing import costs. And that's the wrap for this week. Subscribe to our YouTube channel to stay updated on the latest developments in Sri Lanka.